Welcome back to Investing Talk podcast. We are zeroing in today on a really fascinating company. It's fundamentally changing how it approaches the very volatile crypto sector, Hut 8 Corp. Our mission for this session is pretty clear. Is Hut 8 a good time to buy right now? We've pulled together the latest financials, competitive analysis, technical indicators too, to give you a really solid breakdown. But hey, before we jump in, if you want us to look into a specific company, just leave a comment below. We really do track all your suggestions. And please, subscribe and like this session. It helps us know we're providing value.
Yeah, and looking across all the material we gathered on Hut 8, what really jumps out is how, well, surprisingly cohesive the story is. This isn't just, another minor story. It's really about infrastructure and strategic positioning. We've got clear data on their fundamental health, their unique competitive advantages, and crucially, a timeline of what could be some near-term catalysts.
Okay, great. Let's unpack this starting with the financials then, because Section 1, the numbers are, frankly, kind of wild. When you look at their statements, you see growth that just drastically outpaces the sector. That's really why Wall Street is buzzing right now.
That's definitely the right place to start. The growth trajectory is, well, it's accelerating. Hut 8 reported revenue of $162.39 million for 2024. That's a huge operational milestone.
And just to give that some context for everyone listening, that revenue figure, it's a 69.1% increase from the prior year's $96.05 million. So we aren't just talking about, the market lifting all boats here. The sources suggest this really points to accelerating customer demand for their specialized services, outpacing the sector average by quite a bit.
Exactly. Now, here's where it gets really interesting. Profitability. Net income soared to $331.88 million in 2024. That is a truly staggering 1,419% increase year over year. I mean, for an industry that's often dealing with razor-thin margins and huge CapEx needs, this kind of profit expansion is pretty rare.
Whoa, okay, let's pause on that 1,419% number. That sounds incredible, almost too incredible. We have to ask the critical question here. Is that coming from sustainable day-to-day mining operations? Or is some of that maybe from, non-recurring stuff,
Right.
like a big gain on their Bitcoin holdings or maybe reversing an asset impairment charge?
That's a crucial question, absolutely. And the sources do clarify this blend. So yes, while the rising price of Bitcoin certainly boosts the book value of their holdings, and that definitely contributes to that enormous net income surge, a significant chunk of that leverage is genuinely operational. They're showing vastly improved efficiency. They actually hit an EPS of $1.48.
Okay, $1.48 EPS.
Yeah.
And how do we interpret their current PE ratio then? Sitting at 33.19. For someone maybe new to this sector, is that expensive, cheap, or is it justified?
It's high, definitely. Higher than many sort of pure play miners, but it seems justified from the market's point of view because of their unique profile. When you look at the fundamental health, they are showing really robust profit margins, specifically because of that energy integration we'll talk about, which puts them kind of above their peer group. So that 33.88 PE suggests investors are willing to pay a premium because they think Hut 8 isn't just a mining company, but it's becoming a growing infrastructure play.
Right, infrastructure. Okay, speaking of that, let's talk balance sheet stability. How much risk is actually baked into this growth? Are they just leveraging up like crazy to fund these expansions?
Well, actually, it's quite the opposite. And this is the other, green flag that Wall Street seems to love. The company maintains a net cash position and reports low overall leverage. This financial resilience gives them capacity for major expansion without undue stress. And it offers, well, great protection against sector volatility. And because of their scale and operational leverage, they're generating strong, positive free cash flow. That's basically the lifeblood for sustainable growth.
Okay, so the financial foundation looks incredibly strong, which probably explains why the consensus across, 20 Wall Street analysts is currently a buy or a strong buy.
That high expectation for near-term earnings outperformance really ties a bow on the fundamental story, doesn't it?
It does, but, that foundation only matters if they can sustain it. And sustaining it requires a major competitive edge. So the second part of the story, their moat, is arguably the most compelling piece.
Yeah, this is where it gets really interesting for me, because in this hyper-competitive crypto mining space, just owning a lot of miners, ASICs, application-specific integrated circuits, that's just not enough anymore. You need a moat. What's Hut 8's real differentiator?
Their differentiator is that they are not just a pure play miner. They operate as a vertically integrated miner and a massive energy infrastructure manager. This is what the sources call the Power First platform. They have diversified operations across power, digital infrastructure, compute, and energy services. It's a much broader base. Okay, that concept, the Power First platform, that's the mechanism you mentioned. Can you explain exactly how that gives them a cost advantage over, say, a competitor who just buys ASICs and leases warehouse space somewhere?
Right, it's all about asset utilization and flexibility. A traditional miner, well, they only make money when their ASICs are running and the Bitcoin price is high enough, right? Hut 8, by controlling the energy asset itself, can monetize that power asset. They can deploy capital efficiently by using stranded, low-cost power assets. And here's the clever part. If electricity prices spike, they can actually curtail their mining operations and sell that power back to the grid for a profit.
Ah, okay.
And the successful rapid build-out of facilities like the low-cost Salt Creek project shows they can bring these power-first sites online quickly and economically.
So they create barriers to entry because they aren't just competing on hash rate like everyone else. They're competing on like utility scale, energy optimization, and
Yeah.
automation. Is that it?
Exactly. This deep energy portfolio optimization combined with the, regulatory certainty of operating largely within North America, it creates scale and cost barriers that rival pure play miners just can't overcome easily. They're playing a multidimensional game while others are kind of stuck in that single dimension of just mining Bitcoin.
And that multi-segment approach, that links directly to the buzz we're seeing around diversification, right? Analyst upgrades have been heavily citing increasing demand for high-performance compute, or HPC colocation services. It seems like it's not solely about Bitcoin anymore.
Oh, this is a major structural catalyst. And why are they uniquely positioned for HPC? Well, because HPC things like AI training, machine learning, they require massive, stable, and cheap power 24/7, even more power dense than Bitcoin mining, actually. Hut 8 already has that energy infrastructure and increasingly the cooling capacity needed. Standard older data centers often just can't handle the sheer power demands of modern GPU racks.
Okay, that makes sense. And what about the big speculative rumors? Are these just whispers, or is there some substance behind them in the material we looked at?
The speculation is definitely strong. The sources suggest the company is actively exploring expanded offerings in AI compute and GPU hosting, really leveraging that unique infrastructure for non-crypto workloads. And the biggest rumor, the one that would be a potential game changer for institutional relevance, is speculation about a major strategic agreement possibly on the horizon with a hyperscale cloud provider, someone looking to offload some of its most power-intensive compute loads.
Wow, okay. Hyperscaler deal would be huge. That transition is fascinating. But we have to transition now ourselves to Section 3 timing. So the fundamentals look strong, the moat seems unique, but what does the price action tell us right now? The stock's trading near $48.46. What are the technicals saying about accumulation trends?
Well, the chart is structurally bullish. It's showing clear signs of sustained accumulation, actually. We've seen over 67% green days in the past 30 trading sessions alone. That suggests strong momentum has been consistently with the buyers.
Okay, 67% green days, that's pretty strong. Tell us about the key levels then, the sort of floor and ceiling for potential entry and exit points.
So we've seen key technical support hold firmly above the 50-day moving average. That currently sits around $32.29. For listeners, the 50-day SMA, or simple moving average, is often seen as that short-term trend line. Staying above it confirms short-term bullishness. And crucially, we have long-term bullish confirmation from the 200-day SMA, which is way down at $21.18. That 200-day line is like the barometer for the long-term health of the stock, and its steep upward slope really confirms the underlying strength.
So the foundation seems solid, technically speaking. But what about the immediate hurdle? Is there resistance nearby?
Yes, the immediate hurdle is very close. Resistance sits right near $49.46, just shy of that psychological $50 mark. Breaking that $50 level is pretty critical. If the stock can break and hold above $50 on significant volume, that would validate entry into the projected 3-month bullish trading range, which analysts see extending from about $47 up to $53.
Right. But, when a stock runs this hard, the perennial worry is always about overheating.
Yeah.
Are we risking buying right before some kind of sharp correction here?
Interestingly, the momentum metrics suggest maybe not, or at least not yet. The 14-day Relative Strength Index, the RSI, is sitting at a neutral 35.1. Just for context, the RSI scale measures price, speed, and change. Anything below 30 is usually considered oversold, and above 70 is considered overbought. So at 35.1, we technically have plenty of room for further upside without that immediate technical risk of an overbought correction.
Okay, neutral RSI, room to run. But the stock definitely isn't sleepy, is it? Tell us about the volatility we should expect if we jump in.
You are absolutely right to bring that up. Volatility is key here. Current volatility metrics are extremely high at 17.56%. This isn't a stock you just buy and forget about for a month. This suggests strong upside potential, especially if those catalysts hit. But you absolutely must be prepared for pronounced, quick price swings in both directions.
Yeah, that high volatility connects directly to our final segment, section 4, key catalysts and essential risk factors. So what's the event that's most likely to, turbocharge the price in the near term?
The single biggest trigger on the horizon is the upcoming Q3 earnings release. That's anticipated around late October or early November 2025. This release will really be the ultimate test of whether their whole energy integration strategy is successfully translating into sustainable profitability improvements.
Okay, Q3 earnings. What are the market expectations they need to meet or beat there?
Expectations are high, but they seem grounded in the trend. Consensus anticipates continued year-over-year revenue growth, somewhere around 32.8%. And crucially, they're expected to show significant improvement in efficiency. Analysts are projecting a significantly narrower loss, for example, a projected $0.16 loss per share, which would be a 30.4% improvement compared to the prior year. If they manage to outperform those efficiency expectations, we could see a rapid re-rating upwards.
And we also see clear evidence of major institutional interest, right? The daily volume is high, around 7.4 million shares. And there seem to be momentum-driven inflows from managed funds. Big money seems to be positioning itself ahead of these catalysts.
Yeah, that institutional positioning is often driven by more than just the upcoming earnings report, too. There's confirmed chatter about potential M&A activity, specifically focused on North American compute infrastructure. Plus, any positive regulatory news regarding low carbon intensive mining would disproportionately benefit Hut 8 because of their efficient energy platform.
Right. Okay, finally, let's definitely address the crucial risk factors.
Yeah.
This is a crypto-adjacent stock, so the risks are inherently high.
Absolutely. The primary risk is simply sector exposure. This is quantified by the stock's above-average beta, which sits at 3.45. For listeners, beta basically measures how sensitive a stock is to the overall market movements. A beta of 3.45 means if the S&P 500 moves 1%, this stock is theoretically expected to move 3.45% in the same direction. So it's extremely exposed to Bitcoin price cycles and broader regulatory uncertainty.
Meaning, if Bitcoin drops significantly, this stock could get hammered much harder than maybe the average mining company.
Precisely. It is highly volatile. However, it is important to note that historically, Hut 8 has actually managed to outperform many of its peers during downturns, largely because of that robust cost structure and portfolio management we talked about earlier.
Okay. And what about company-specific risks,
Ah.
especially regarding their ambitious transition into HPC?
Execution risk is paramount here. They have to successfully ramp up new, quite complex facilities. They face constant energy price volatility, which impacts their margins even with that power-first model. And finally, the competition in the specialized HPC and AI compute space is extremely intense. They really need to execute perfectly to gain market share against established data center players.
Okay, so let's try and synthesize this entire analysis then. We've got explosive financials, a clear structurally protected competitive advantage through energy integration, and a technical setup showing strong accumulation ahead of some major near-term catalysts. What's your final verdict based on all this?
Based on synthesizing all the source material, the case is incredibly compelling right now. My overall analysis rating comes out as an overall bullish rating of 9/10. The fundamental strength, that clear competitive moat, and the immediate earnings catalyst coming up, they create a very powerful investment thesis right now, I think. Now, for short-term traders listening, the strategy should probably focus on those Q4 2025 events, the November earnings and those potential strategic partnership announcements to play the high tactical upside. You're essentially leveraging the expected volatility. For long-term investors, though, the focus shifts entirely. It's about their unique structural expansion into energy and digital infrastructure. That's where the potential for multi-year wealth creation lies. This company is clearly trying to position itself to be judged by more than just the fluctuating price of Bitcoin.
Yeah, that structural shift really is the core insight here, isn't it? It's what seems to differentiate Hut 8 from the rest of the pack. So here's a final thought for you to mull over. Considering Hut 8's structural reliance on its proprietary power-first platform, how much more important is the stability and optimization of their energy assets compared to the day-to-day fluctuation of Bitcoin's price in determining their long-term success? That's the question to consider as you conduct your own final due diligence. We'll see you on the next session.